This is episode 1 of the new series which I'll be starting on my YouTube channel called Forex Foundations. Now in this course I'm gonna try and attempt to give you guys free education which is available on the internet but all in one place under this playlist. So the first episode is going to be covering candlesticks. So for anyone that doesn't know how to read a candlestick chart like you can see in front of you, I'll be going over this and discussing it, and then we'll also look into some candlestick patterns which you guys can capitalize off, and I'll be giving you some real examples of how exactly you should be using it. So to begin with, the first thing we need to establish is what exactly a candlestick is. Now on the left side you can see a bullish example where you have the low of the candle, which is going to be the lowest point, as you can see by the wick, and similarly you also have the high of the candle, which is going to be the wick. Now this is the same on the bearish side as well. The high and the low always stay the same. The high is going to be literally the highest point and the low is going to be literally the lowest point of the candle. Now this just basically means the candle, when it did open right over here, it first traveled down, creating its low before traveling back up, creating its high, and then ultimately closing right over here at the end of however minutes it was. So for example, if I was to show you on the trading view chart, if you see we are on the 4-hour time frame. So since we are on the 4-hour time frame, what it's trying to say to you is, if I scroll down, so to show you guys an example, if this is the open of the candle, the price will then push down, and then however far it traveled down, that will be the wick of that candle. So if I draw it out right here, let's say it traveled down to this point over here, that is going to be the wick. Let's center this like such, and we can color this to be green. Now it can be any color you want it to be, it's customizable, but for simplicity's sake, let's say it's green. So the candle opens here, travels down, creating its low, and then travels up, leaving a wick behind, and let's say it travels up to this point right over here before ultimately closing back down over here. So at that point, this will then be the other wick, closing at the high right over here. So that's how a candlestick is formed, and at the close, since this is the 4-hour time frame, this will take 4 hours to form. So we'll open right over here, take 4 hours to form, and close right over here. Now this is the very same thing with a bearish example as well, where this time the close is at the top, the open is at the top and the close is at the bottom of the body. With a bullish example, the open is at the bottom and the close is at the top. So now we've established the basics of a candlestick and how exactly it is formed. Now we can move over to some chart patterns. Now this may seem overwhelming in the beginning, however you only need maybe 2 or 3 chart patterns which you can use time and time again. Now it does depend on exactly what strategy you go with and where exactly you're going to be using these levels, which I'll also discuss with you in the live examples which we'll go over in a bit. So now if you look at the bullish examples, you have many different candlestick charts. Now simply applying a general logic principle to the candlesticks will help you imply what exactly the candlesticks are meaning. For example, if you look at this bullish example over here, just by simply looking at this image over here, you can see this bearish candle, this red candle, is smaller than this bullish candle. And just by using mere logic, you can understand that this will mean there is more buyers than sellers. The buyers are stronger, and so you've got a bullish engulfing candle. The bullish candle is engulfing the bearish candle, which is to the left. Similarly, you can also see that a tweezer bottom is giving you wick rejections at the bottom, although the bodies are a similar size. Now this is very effective when you're at either a level of support or resistance. So in this case, since it's a bullish example, we can imagine that this will be at a level of support. So if I use a pen over here, and we can say that this over here is going to be a level of support right over here. So in this example, this chart pattern will be very effective. Now if we also move on to the right side again, by using mere logic, you can see one candlestick pushed up, and then it took 3 candlesticks to cover the same space this one bullish candlestick took. So in other words, what it's trying to show you is the fact that there is less bearish volume when it retraces back down, as it's taken 3 candlesticks for it to cover the same area. And then again, you see a nice bullish engulfing. This time, this bullish bar is engulfing the previous 3 candlesticks. So this is again showing you bullish momentum, and it can be very effective at a significant level such as a support and resistance. Now moving over to the bearish side, it is literally the same thing but just the other way around. In this case, you have the bearish candle greater than the bullish candle, which is engulfing the bullish candle over here. Similarly, in this case, you would want to use a level of resistance, and as you can see, price came into this level of resistance, rejected off of it, and it's holding that level right over here. And lastly, you can see that we have a huge bearish candle, which will be a Mariposa candle, followed by 3 consecutive bullish candles covering the same volume. So you can see that bullish volume is depleting, and then you can see bearish volume coming back into the market, indicating that there are good potential selling opportunities from this point over here. Now lastly, you can also get candlesticks like this where the open and the close of the body are the exact same, which is what we call a doji. Now you can get different types of dojis where it's closing in the middle, or either on the top or the bottom side of the candles. This again just indicates neutrality. However, if it is at a level of support and resistance, it can also indicate a depletion in volume. So if we was to, in this case, get this candle right over here, this will also signify the same thing, where we get a depletion in volume. So again, just by using logic to look at the candlesticks, it can help a lot. So I'd highly recommend you guys to definitely pay attention to this midsection over here of the candlesticks. Now another candlestick pattern which I would want to emphasize, and which is very important and I also use, are the double tops and the double bottoms. So if you come on over to my trading view and we get rid of this right over here, double tops and double bottoms are very important and very effective, especially at levels of support and resistance. So you might be noticing that I'm talking about support and resistance a lot in a candlestick video, and it's because these candlestick patterns are the most effective when we're at a level of support or at a level of resistance, to act as a entry trigger to enter the trade. Now the last one I would want to go over is a double top pattern, which if we scroll back, we can see that price right over here, let's say for argument's sake, we have a nice zone right over here, right? If we then quickly change it back to 1, right? So you can see price pushed into our zone, retraced, and it failed to create a higher high before it pushed back down. So this pattern over here will be a double top pattern. In other words, what price is doing is price is pushing up, retracing, and it's coming back into the same high point it created before that push down. So it's a double top, as you can see. And similarly, for a bearish scenario, it will be a double bottom, where you see price pushing down, retracing before forming a double bottom, and then the ultimate push up. So this is a pattern which I use in my own trading strategy, and I highly recommend you guys to also remember this as well. Now to give you some real life chart examples, straight away I can see one example right over here. So this is a 2-in-1 pattern which I see, and the reason is because you see price coming into our level of significance. So you can just call this a level of resistance if you like. Price comes into our level of resistance, and then we get a bearish engulfing candle. This is exactly what we was going over right over here. We've seen a nice bearish engulfing candle right over here. However, this can also be considered this pattern which I showed you, which is right over here. And the reason is because we've seen a depletion in volume when we've pushed up. If we come back to my charts, we've seen a depletion of volume when we've seen a push up and then a bearish candlestick closure. So this is also a similar pattern to that, although not exactly as we see it over here. So again, a bit of differences can happen. However, that is the general gist. So this is a nice bearish engulfing candle right here. Now lastly, to show you guys a tweezer top or a tweezer bottom pattern, if we scroll back right over here, you can see again, these are most effective at levels of support and resistance. So here we've got a nice level of resistance forming here, and once price does come back into our level, you can see a nice tweezer top pattern forming right over here before that push down. Now, although it's not the most perfect and the most accurate as seen in the images over here, it is generally considered a tweezer top due to the fact the bodies are a similar size, and we've seen it coming into our level of resistance right here. So anyways, I hope this video was a bit informative for you guys. If you did find it informative, be sure to check out the other videos in this series, which I'll be releasing one by one. And this is just to get you guys the free education which you need to get you ready to learn a strategy. So I hope you guys did enjoy this video, and I'll see you guys next time.